HYBE chairman Bang Si Hyuk is currently under investigation by South Korea's Financial Supervisory Service, FSS, for alleged involvement in undisclosed shareholder agreements that reportedly netted him approximately 400 billion Korean won, around $285 million, during HYBE 2020 initial public offering, IPO. These agreements, made with private equity firms such as STIC Investments, Estone Equity Partners, and New Main Equity, stipulated that Bang would receive 30% of the profits from the sale of their shares if the IPO succeeded. The controversy centers on the lack of disclosure of these agreements during the IPO process. The FSS is examining whether the omission of these agreements from the securities registration statement constitutes a violation of capital market laws. The agreements also included clauses that allowed the private equity firms to bypass typical lockup periods, enabling them to sell significant portions of their shares immediately after the IPO. Following the IPO, HYBE's stock price experienced a significant decline, dropping from an initial price of 270,000 Korean won to around 140,000 Korean won within 2 weeks. This rapid decline raised concerns among retail investors and market observers, who argue that the undisclosed agreements may have contributed to the stock's volatility and investor losses. HYBE has denied any legal wrongdoing, stating that the agreements were private transactions between shareholders and did not require disclosure under existing regulations. However, the FSS is continuing its investigation to determine whether these agreements should have been disclosed and if they violated any laws. The outcome of this investigation could have significant implications for corporate governance and transparency in South Korea's financial markets, particularly concerning the disclosure of private agreements that may impact public investors.